Okay, this is a tutorial about how to use this financial tracker and projection app. So that way you can um, project out your business. Okay. All right. So you will see at the bottom here, there's a bunch of tabs. It goes all the way out to, well, a lot, 21. Of the 21 tabs, you are only going to input things into the first five here. Once we get past that, we don't touch anything. All the rest auto populates. So we will start with the first one. In the introduction tab right here, we can input the company name. We'll call this one test. All right, so then we move on to the next tab. This is the required startup funds for a new business, or you can use this as a project if you're looking to build out a financial project, whatever you're looking to do. Great resource to get you started. But this first tab here is all about the one-time expenses that you will have to incur to get this thing off the ground. So we can use any business as an example. What we'll do for today's talking point is we'll just use a landscape company that's about to launch, and we'll think about initial startup costs. So in this whole worksheet, there's things you can touch and things you can't, and I'll walk you through that throughout. First thing is all of these boxes in gray, you can input information in. The ones in green here, you can make changes to. Um, as far as the titles go, you can change some of these titles to be different things that would apply necessarily to your specific business. So in the case of landscape company like this, we could start off with the real estate and the land. So let's assume that this company is going to go out and purchase a property to run their company out of. So this would be the initial purchase of that. We could separate this out if we're going to build some buildings on the property as well. We could do that here under this tab. Like I said, we could always change these. But let's assume we go buy a piece of property for $200,000 that has a building on it we're going to use. All right, we don't need it. Well, let's say we're going to put a shed on that property because it's landscape, so we need a space for a shed. Leaseholder improvements. We're going to go into that building and make it look nice for the office space and everything. And then maybe in addition, we need to buy our equipment. So we'll change this to equipment. And by equipment, which I spelled wrong, but you know what I mean. By equipment, let's say in this case, it's all of like the mowers and the trailer and all that stuff. Let's say when we add all of that stuff up together, it comes to $100,000. We'll put that there. And let's say we also need a truck to pull all this stuff with, maybe a small dump body truck where we can put materials in it. So we're going to incorporate the cost of a truck in there, and then let's say we're good. All right, like I said, you can change some of these things. So that gives us like our base startup. Now for operating capital to kind of kick this thing off, any opening salaries or wages, we may have to hire some people, pay them a couple weeks until we get money rolling in. So we'll put, $10,000 in there for that. We got to prepay some insurance premiums. We definitely inventory here. We'll put material. Maybe we're going to keep some material. Maybe we're going to keep some material right on site so that we can, we have it. Maybe it's mulch, things like that. Legal and accounting fees to get started. We'll put about $1,000 there. Now, assume no rent deposits. We definitely would need utility deposits. Supplies, maybe an initial supply run, gloves, things like that, protective equipment for our guys. Maybe we run a little advertising campaign to let people know we're kicking off. We got some business licenses in there. And then we want to keep some money in the bank for unexpected things. So we'll put $20,000 there. So now we have all of these initial build outs, and this is these one-time startup costs that we have all added together. We can adjust depreciation over here. Okay, so we can depreciate buildings and some other things however we see fit. We'll leave that alone for right now, but know that you can change this to be appropriate with the things that you put over here. Okay, so we're going to leave all this. This auto-populates. We don't touch that. This auto-populates. Now, so what it tells us is our initial startup for this whole thing is $457,750. So where's that money going to come from? So if assuming we're going to get a traditional loan, maybe the bank is going to require us to put 20% down. So we're going to take 20% of that, which will be about 96,000. We'll see how close we were. We were at 20.9, so we're right about there. It auto-calculated that. So we bring 96,000 to the table, which means that we are then going to get a loan for the remainder. You can, this will kind of auto-populate here. You can change these loan rates in the terms. This is pretty low for what current rates are, so we'll adjust those appropriately. If you brought in some outside investors, maybe to sell some equity, so that way, you can get into the property a little cheaper, you can put that number right here. So let's say we brought in like $50,000 of outside investors to offset. And you can see also down here, it gives us a line of credit amount that it thinks we should have. Okay. In this case, it looks like it's giving us a line of credit amount of about $16,000. And it calculated some monthly mortgage payments over here as well. All right, so we have completed the first tab and input all the one-time startup costs. Now we will go to tab 2 and we'll talk about salaries and wages. For salaries and wages, it gives us a couple different things that we can put in here so that we can look at this. All right, the first thing is owner's compensation. So let's assume that there's one owner and we are going to pay ourselves, let's say $5,000 a month. That's what we need to pay. All right, so now we have salaries. So there's a couple ways we can break this out. We can put employees here where we can list the number of employees, whether it be 1 or 2, and how much each one is going to make. We can only do this if they're going to make the same amount. Keep that in mind. So this works well if you are hiring like a group of employees and they'll all make about the same. You can use that here. So let's just say in this case, we're going to hire 3 landscapers, and each one of them is going to make $1,000 a week. And so we'll say they're each going to make $4,000 a month. Now you can see I only put the amount in there for 1. It automatically did the multiplier because I have 3 in here. If we were only to hire 2 people, you'll see that it will adjust those numbers and bring them down for year 1, year 2, year 3. So you can use that here. Let's say we don't want to have someone on salary and maybe we're just going to do hourly employees, either full-time or part-time. We can take those same people and put them over here. So like I said, as long as they're making the same amount. So if we have 2 landscapers and we are going to say, they're going to work about 40 hours a week and they're going to get paid $20 an hour. Now we've calculated that cost for those landscapers over that period of time. We can do the same thing for part-timers. Maybe we have one person that comes in and works in the shop 10 hours a week, just organizing or doing whatever they do. They're kind of a helper, making a little less money. And then we can do the same thing with independent contractors down here. And that is set up just like owner's compensation and salary, where we put how many and what the monthly cost for each one would be. Okay, so you can use all that. You can, don't touch any of these formulas over here because they auto-populate. but you can adjust for yearly increases. If you're not going to give them at all, you could set that at 0. If you're going to maybe be a little generous, you could, give a little more, and it will auto-populate year 2 and year 3 salaries. And then over here, you can go into whatever your state and federal tax rates are, and you can put those in, and it'll correctly populate for you over here, and you'll see how this carries over. So now we have input all of the salaries into the spreadsheet, so we can move on to tab 3, which now we are talking about our monthly costs. So these are the monthly bills that we know they're going to come up pretty much every month. We can put other things in here. Let's say you have and we'll do like a seminar. I'll show you how that works. If you have something that maybe you do once a year, we're just going to break that down, divide it by 12, and give it like a monthly number. But let's say we're going to have an advertising budget of $200 a month. We have our truck fees, whether it be gas and insurance and all that maintenance and all that stuff. So we're going to estimate a monthly amount for the truck fees, bank and merchant fees. We can change these. So you can change these to be whatever specifically, you want to do that's related to your specific business. So this is a landscape company. So they spend a lot of, they're going to have a monthly gas bill. We can put it here, or we can put it with some of the variable costs for to run some of the equipment. We'll put it as a variable cost later. So other things that a landscape company might have, well, let's just, they need internet. Okay, so we're going to put a internet cost in there. Let's say they're going to go to a yearly seminar. The owner's going to go to a landscaping seminar, and it's $2,500 a year. For ease of numbers, let's just say it's $1,200 a year. So then we would just break that down, divide it by 12, make it $100 a month. We've now accounted for that line item, and we've just broken it down monthly. So dues and subscriptions, they're part of a landscape association thing. That's like $25 a month. They have their insurance fees here, licensing and permitting, legal professional, office supplies, and on and on and on. We're going to go down, and we're going to think through all of the things that we have, and then we're going to put all these monthly expenses in. You're going to think through the business as best you can. Once you have done that, like I said, you can change these here and then input the numbers. This auto-populates, so leave that alone. You can also change the percent increase if you think because of things are going to get more expensive, like they always do. This assumes a 3% increase year over year, which is probably accurate. Good start. So all this at the bottom auto-populates. We're going to leave that alone. Gives us a total fixed operating expense down here. And now we are going to go to tab 4. So the last 3 tabs have all been expenses, and now we are going to input profits. The way this sheet works is tab 4 and tab 5 are the same. Okay, they're the exact same. Each of them has 2 block segments that look like this that allow you to input 4 total revenue streams. So I'm going to clear this out really quick and get these to 0 so we can start fresh. Okay, and I'll do this one. All right, perfect. All right, so now we are going to think through whatever the first product or service is. And because we can only put 4, we got to kind of group them together. Okay, we got to think of them, hold it. So one of the things that we know that every landscaper is going to do is lawn cuts. So that's definitely going to be one of the units we're going to track on. Here, under price per unit in the gray box here, we are now going to put an average price that they do. Now, obviously, a 3-acre piece of property is going to be less than a 10-acre piece of property. So we're looking at an average. So let's just say that this company, the average long cut is $75 per cut. Here we have variable cost per unit. So that means variable costs are expenses that they will incur every time that they go out and they cut a lawn. So these are pretty obvious. These are we already accounted for the employees, so we don't need to put them there. But if you wanted to, you could remove maybe the employees from the payroll part that we did in tab 2 under salaries, and you could put them under, you could put the landscapers under variable costs. So let's say every time we go out for a cut, the average cut maybe takes an hour, and we could put that $25 variable cost here. That's an option too. We didn't do it that way here. So we're not going to put that, but we are going to put gas, and we're going to assume that they burn through about $15 in gas for each cut. That might be high, but it's okay. We'll just put it in there. So that's about the expense that we know we're going to incur for a long cut. So now we go over to our units down here, and we start to think about, based on the months we see up here, how many lawn cuts can we do in a month? Well, in January and February, if we're in New England, we're not doing any. Right? March, we might start getting out there, late March, early April maybe. But let's assume we're doing 0 January, February, and March. So now we get into April, and we're starting to do those first cuts. And if we can do on any given day, if we're going to work 6 days a week, let's say Monday through Saturday, if we can do six or seven houses a day, 6 days a week, right? So 6 times 6 would be 36. And then 4 weeks on the average, 4 weeks in a month. So 36 times 4 would be 112, 120, 146. Now, that would assume it never rained, right? Never rained, we never had any issues. So let's assume that 20% of those days we're going to get canceled because of rain. So if we had 146, we'll take 30 off of that, and we'll say we can do about 116 with the current crew we have, with this one crew. So we do 116 on the average, and we do that all the way through. Now, this number can't really go up unless we probably hire another crew. So let's assume for the first year we don't hire another crew. All right, and we just do cuts all the way through October, and then in November they start to die out, and maybe we just do like some final cuts in November. So let's cut that in half and say we do 60, and then we're back at 0 in December. Okay, now let's say in year 2 we hire a second crew, and we can now take on, maybe we grow by like 50%. So we're going to do a 50% growth year 2. Okay. And then let's say that in year 3, we maximize that. We maximize them, and they're doing just as much. So we do another 50% there. And now we've almost, we've more than doubled where we started. Okay. So we can use these to just do increases across the board. So this is year 2, year 3 growth. All right, now this last one here says overhead expense allocation. And what that means is we inputted a bunch of expenses. And for this revenue stream, how much do we want to apply the expenses to this revenue stream? The easiest way to do this on this sheet is if you put 4 revenue streams, 2 in here, and then 2 in tab 5, then I would say do each one at 25%. So for ease of use, in this demo, we'll just do 2 revenue streams. So I'm going to allocate 50% of all the expenses to this one, and then I'm going to allocate another 50% of all the expenses to this one. So what is this second revenue stream going to be? Well, this second revenue stream is going to be mulch. All right, so we are going to deliver and spread mulch. Price per unit. So we could do this a bunch of different ways. We could consider like an average house and just say, how many houses do we think we can get to spread mulch on, and how much would we charge to mulch a house? And maybe that charge is $400. Or we could say, all right, what about if we just did it on yards of mulch? Okay, and we charge a certain amount per yard. So let's say we decide that we're going to charge $70 for every yard of mulch we spread. The variable cost per unit there is going to be we have to purchase the mulch. So let's assume we're getting it wholesale, a good price. We're going to pay $25 per yard. Okay, now same thing here. Now we know about what we're doing here. We have we're in January here. We're not spreading any mulch in January. We're not spreading any mulch in February, and probably not in March. Now in April, people might be considering like, all right, we're going to get ready for the spring, April and May and June, and remulch. So let's say now an average house uses maybe 5 yards of mulch. Let's say 5 yards. And we decide, and we can do about one of those a day on on a good day. So we said up here, you got to account for rain in about 20%. So if we're going to work 6 days and we're going to mulch one house each of those days, that would be in 4 weeks, 6, 12, 18, 24 houses. We will take in a month. We'll take the same factor and say it's going to rain 20% of the time. So that means that out of those 24, we're going to take 5 away. So we're going to do about 19. Okay, so we're going to mulch about 19 houses. That number's wrong. With an average of 5 yards at each house. So if we do 19 times 5, we're going to come up with 95 yards. So we're spreading 95 yards of mulch. And let's assume we do that. And then once we get into the middle of summer, where are we here? We're in July. Once we get into the middle of summer, less people are doing that. They've already done it. So we're going to say it cuts in half to about 40. 40. And then it really starts to dwindle off. People aren't really doing it. And then we're down to 0 again. Nobody's doing it. Okay, we're not getting any. All right, so this is our yards of mulch. Now we've calculated all that. Let's assume in year 2, as our clients grew, this grew as well. So we'll do, we have a good second year with 50% increase, and then a good third year, another 50% increase. And now we have a revenue stream for all that. And we allocated 50% revenue to that as well. So we got 2 revenue streams here. Now we'll click on tab 5. This will allow us to input 2 more. I'm going to delete all the info that was just sitting in here from before. Okay. All right. And now we'll put one more in. Landscape companies in the winter, what do? They plow. Okay. Price per unit, we'll just do this as like an hourly charge. So let's say that they are charging $75 an hour, and we variable cost per unit. Let's say we're going to pay the driver. We're paying $30 an hour, and then we got some gas in there. Every hour you might be burning a couple gallons. So we'll just say that the variable cost per unit is $40 out of the $75 an hour. All right, now in January we get a lot of snow. So let's assume we get some good snow. We have a couple storms, maybe where they're running all day. Maybe they've been plowing for 24 hours. They get, all these accounts. So if we were able, if we had 5 or 6 storms throughout the month there, we might have up to 200 billable hours of plowing there. And February might be the same. Maybe we have same thing. March, it really starts to slow down. And then when we get into April, maybe even less. And then by May, we don't really have any more. October, November, and then December, we maybe start to trickle back in with some more. So we got some plowing hours built in. We got a little bit of growth here as well. Now you see the expense allocation is 0. A couple things we could do here is we could even them all out, right? So we could go back to the other two and make each one of them 33%. Or we could just keep this one at 0, which is fine. All right, that's what we'll do. So now we could input another one here. We've inputted 3 revenue sources. We did all of our monthly fixed expenses. We did salaries and wages, and we did required startup funds. And now we are done. And as you see, when you go to these later tabs, you will see that they bring up our profit and loss statements. And this profit and loss statement shows that we are losing a bunch of money with this fake scenario that we have here. Cash flow statement shows that things are not really good, and we're constantly drawing down on our line of credit in this fake scenario we have here. So the scenario I made up wasn't really profitable. However, it was just a fake scenario, and the main point of it was to show you how to use this form and what it will populate for you. The nice thing is you can see you get all these reports. You get a 3-year balance sheet here, 3-year profit and loss showing end of year summary. It looks like we kind of level off after a while, and our losses become a little less and a little less every year. We still lose a ton of money in this scenario, though. All right, but that's it for today. This is how you can use this sheet, and I hope this is helpful. For more forms like this, go to our website, onestrategy.com, wonstrategy.com. And if you register as a member, you can go to our templates page, and there's a bunch of templates on there that you can download like this for your business benefit. Thanks for joining, and we'll talk to you soon.